Concept of risk management. Doesn't mean to be a boring topic. Well, it's as boring as you make it, I suppose. We'll try and make it as interesting as we can. But firstly, let's go into the title. See you in a tick. Welcome to the next instalment for ASX Traders United. It's been quite a while, but hopefully this will actually be quite of interest to you all in relation to risk management. I've labelled it the art and science of risk management, and it may not be the most sexiest of all topics in terms of trading, but definitely something worthy of consideration, and I hope you do find it useful and of interest. Now, I'm sure you've seen this recently in relation to a lot of the superannuation advertising that's going on around Australia at this point in time. And it is something that strikes dear to my heart overall. I find it quite interesting and quite fascinating, especially in light of superannuation performance. A lot of the times they're going to be highlighting quite a lot of interesting statistics that they actually will be presenting quite a lot, especially in terms of performance. Over the last 20 years, over the last 35 years, really more importantly than anything else, we really need to be considering what's been going on over recent times. And this is where something has been very, very interesting in terms of having a look, digging a little bit deeper when you think about it. And there has been a publication recently in terms of Pro Solutions private clients that you can actually find very, very readily on the internet. And there's the HTML down below. Have a look at in your own time, have a bit of a read. But 1 year performance hasn't been too great from quite a lot of the superannuation funds overall. And you can see that there, just looking at the balanced options, that a lot of superannuation funds haven't been going all that great. That's just the balanced options. Doesn't even look very, very fantastic when you take a look at the growth options. So in the overall circumstance here, this is the kind of thing that we're actually really seeing in terms of 1 year performance. But why is that? Well, when you think about it, this is really the circumstance in the grand scheme of things. Could you have done better yourself? Well, a lot of people probably think they could have in terms of having a look in terms of individual stock picking. But let's not be too hard on the super funds here either when we really think about it as well. When we have a look at that particular time frame that they were actually looking at with that particular study, they were looking from between the 30th of June 2021 and the 30th of June 2022. Overall, when you take a look at the All Ordinaries, which is composed of the top 500 Australian stocks, there was an 11.1% decline over that time period. And there was a bit of choppiness, as you can see from the actual chart itself there as well. So when you look at those stats overall from the super funds, they haven't done too badly on a comparative scale if you just look at the share market. Now, obviously, they diversify and look at other areas in terms of their investment portfolio, looking at other areas, say, property-wise or anything like that as well there too. So they're not just looking at the Australian share market, they're diversifying into other areas as well. Could you have done better yourself? Well, there is always that potential. If you want personal control, then you can take a look and do your own thing, even in superannuation funds that do offer that opportunity. There are opportunities and possibilities that you can do for yourself in terms of certain specific super funds or even your own personal investment. Take a think back, even in terms of that previous discussion we had with Nic Cook of our own ASX Traders United. That was back at episode 1, back at the end of 2020. Have a think about that. That was about 2 years ago. Time flies when you're enjoying yourself, and also when you have a pandemic in the way. But have a think about that in terms of a passive investment possibility. There are things there. You could have just basically been doing simple index exchange traded funds. Now, Nic did discuss that opportunity in terms of dollar cost averaging. As the price of the share markets themselves come down, you would be buying more. As the prices go up, you'd be buying less. Have a listen back to that particular discussion there. That could be an idea of passive investing that you may wish to actually get involved in and have a look if that suits your style. That could be an opportunity there. I'll put a card into that particular that presentation here as a link here. You can actually click directly to that as well so that you can actually have a look at that presentation and see if that actually matches your style as well. Alternatively, you may have more active investing that you wish to actually be involved in as well. Have a look at your own personal preferences, see what suits your style. You may have even gathered ideas from the ASX Traders United forum as well there too. Have a look at the community, see whose ideas match your preferences there as well. We have been having those competitions recently as well too. Some of those ideas may have actually resonated with your own style. Have a look at that as well there too. Well, hopefully you may have gathered some ideas. If not, keep an eye out, see who resonates with you personally in terms of your style as well. Importantly, and this really is an important factor here as well too, it really is whatever suits your preference and style in terms of your own risk management, your own trading, your own investing style. Really importantly, enjoy the process and the learning. This is going to be a skill you'll be able to take throughout your entire life, suited to your needs. And before we proceed to where I actually provide you a gift, and yes, I'm going to give you something completely free, no strings attached, in terms of risk management here as well, that you'll be able to consider using in your own trading and your own investing. Let's take a look at the current state of markets here right now at this point in time in mid-December 2022. Okay, close of markets, we're looking here 16th of December 2022. Right now at this point in time, the week's closed, trading has totally ceased for the entire week. We'll take a look at the state of the markets, Australian markets as well as the United States markets. Quick brief overview as to what the circumstances are. I'll take you through in terms of what we're actually seeing from the charts perspective. Let the charts tell the story. Don't listen to the commentary. That's all I can personally suggest in terms of a recommendation or anything there. Remember, no financial advice here, but this is what is a really good idea to do in your own trading and investing style anyway. Have a listen to what you see from the charts yourself, having a look even in terms of thinking from a fundamental perspective or technical, what is being told from your own perspective, what that is actually telling you personally. Don't let the commentary and everyone else say what's going on. What is going on in your own mind, and let yourself tell you the story in terms of your own money, because that's really the circumstance of what's going on here in the grand scheme of things. You might hear the markets are volatile. Well, really, is that really the case? Are the markets thinking that? You may change your mind after you see some of these charts. But everyone's selling. You might be hearing that. Really? You have to remember, the market is where both buyers and sellers make a market. Without both buyers and sellers meeting together, you haven't got a market. So not everyone's selling. You've got buyers. Without buyers and sellers meeting together, you haven't got a marketplace. So not everyone's selling. You've got buyers as well. So you've got to be able to listen to what people are saying and be able to think rationally behind everything that's going on as well. Am I personally a doomsayer of the markets? A lot of people think I am. A lot of people think I'm a permanent bear. But if you've been following what's been going on the ASX Traders United site, you've probably been seeing that I've actually been accumulating small positions as well in terms of what's been going on. We'll go through a few of those as we go through this particular discussion as well. So I'd have to say, not exactly, but we should always consider the risk and exposure. And I'll take you through step by step as well throughout this discussion. But really, a simple, effective barometer of the markets is the 30-week moving average, which is very similar to the 200-day moving average, which kind of makes sense. If you think about 200 divided by 7, you're going to get to 30 in terms of days and weeks conversion. If you're not exactly too sure what all of this means, have a look at this particular reference. I personally think of it as one of the Bibles in terms of trading. It's a great read that describes this concept. Stan Weinstein's Secrets for Profiting in Bull and Bear Markets. It's a very quick read when you think about it as well. Just take your time with it, read a chapter or two each day, and you'll be finished within a week. It's really that simple in terms of a read there. Very easy to comprehend and a great introduction to technical analysis if you're not already involved with it. And he basically describes the 30-week moving average extremely well. Now, looking at a 30-week moving average, this here is a chart of the All Ordinaries, the weekly chart in itself there. Really just focus on the red line itself. That is the 30-week moving average. In simple terms, all we're basically doing with a weekly moving average is we're really just taking, in terms of the 30-week moving average, We're looking at, in terms of today, for instance, we're having a look at what the last 30 weeks are altogether, adding them all together and then dividing it by 30. That is today. And that last week did the same thing there and plotting that line there. The week before did the same at that point in time, plotting it there, and it smooths it all out. That's essentially all a weekly moving average is. In terms of Stan Weinstein's theories and his own practices there, whenever you actually have something trading above the 30-week moving average, you are generally considering it to be a bullish move. Anything trading below the 30-week moving average is generally considered to be bearish. So you can basically see that at this point in time, the All Ordinaries is trading above the 30-week moving average, which would be considered to be relatively bullish or relatively safe, if you want to think of it that way, overall in the grand scheme of things. And you can really see that circumstance occurring around about here from around about the end of 2020 all the way through to probably around about the beginning of 2022. Okay, that's the circumstance there. And you can see that from the scale down below there too. Since the beginning of 2022, which is right about, if I can get my cursor to come back up, right around about here where the peak was, around about here, it's been quite turbulent. This year has been quite interesting. That is really the circumstance there. And that's where it's really dipped below and above and below and above and below. And that's basically been the circumstance here for the All Ordinaries, the top 500 Australian stocks. Now, the XVI is basically the volatility of the top 200 Australian stocks. Interestingly, as you'll see on the far right-hand side, in terms of the volatility, we are actually not considered to be very volatile at all. Remember that quote that I said to you before? Markets are volatile. Are they really? We are actually very, very low in volatility at this point in time on the Australian markets. Compare and contrast that to the beginning of 2020. Take a look at that. Very, very high volatility at that point in time there. And if we scroll back to the All Ordinaries, you can see, look, you can really look at that why. Okay, there was a really massive drop at the beginning of 2020. Understandably so. Volatility was very, very high. Everyone was just going oof, very, very quick in terms of selling everything. Now, what drives the volatility? A lot of people will be buying options for protection. That's essentially what goes on in the overall scheme of things. And that's what was driving the volatility here in terms of the top 200 stocks. That's what basically goes on and drives volatility there. Really, since then, it's been dawdling along. It's been going up a little bit here and then straight back down. No. It's literally been what's been going on overall. There have been some peaks of volatility, but not as drastic as what you saw right at the beginning of 2020. So overall, yes, the markets have been a little bit volatile, but not as drastic as what you've really been seeing at the beginning of 2020. And if we go back to that All Ordinaries again, you can really see there at the beginning of 2020, we did have some peaks downwards as well, especially into June. But what happened to the volatility around about June? It peaked a little. It went up to around about a 25, but then it came back quickly down again. Okay. This is the circumstances, what we've currently got as well there too. We had a recent peak, but then it's come back down. So what's the circumstance here? I'll leave you to judge in terms of having a think about that for yourself as well, whether or not we'll actually have carry downwards in terms of the markets overall in relation to the volatility there. But also remember as well, we are sometimes reliant, we usually reliant when you think about it too, in terms of what happens around the rest of the world. Remembering that the Australian market really comprises only around about 3% of the world economy. So we are generally reliant on other factors around the world. Now, there's been a lot of talk about interest rates. The bond market, VGB, you probably heard me talk about this on the ASX Traders United website as well. VGB, the bonds themselves are inversely related to interest rates. And you can see the story here, especially when you think about it in terms of 2022, this is where it starts here, and the bonds have just gone straight down. Well, what's happened to interest rates over 2022? They've gone up, inversely related, okay? So as the bonds themselves have gone down, interest rates have gone up. Very interesting in terms of the bounce we're actually seeing here, though, towards the end of the year in terms of the bonds themselves. Does that mean that the bonds are actually on the way back up? Well, they're actually trading above the 30-week moving average. As you can see, they're trading above that red line. So there is a potential that the bonds might increase, which would then potentially mean that interest rates may decrease. Now, notice I'm using the word may. The governments generally tend to react very, very well after the fact. So we may get something going on a little bit later on down the line. Interesting things may occur down the line. We'll see how things go. But then again, will it stay above this line in terms of the bonds as well is another factor. So very, very interesting times potentially ahead. Keep an eye on this. This could be very, very fascinating. We could also have a bit of a double top here when you think about it as well. It may not be able to breach through this $47 level in terms of the bond level itself here, and it might just fall flat on its face. Now, I was talking about the American markets before. This is the state of the American markets on the weekly chart. Now, isn't this interesting here? This has actually just fallen this week below the 30-week moving average. This is why I'm actually saying it's very, very timely in terms of looking at risk management when you think about it here as well. Just fallen in terms of the close beneath the 30-week moving average, and also when you look at it here too, fallen below the 10-week moving average, which is that blue line as well. So we may actually have some very short-term levels in terms of falling here as well. So very, very fascinating in terms of what's actually going on here. Now, if you've been following the American markets as well, this week has not been good for them. Last week was definitely not good for them. So there's lots of things happening at this point in time there as well too. So we've got some very, very interesting times ahead here as well. And if you're very, very astute as well, you'll actually have a look at this week's candle as well there too. And it's got a very, very tall tail at the top there too. So it means it's basically gone all the way up here and then come all the way back down. So there's been a lot of retracement in terms of the actual prices as well here, looking at the top 500 stocks in the S&P. And they also have their own VIX measure in terms of their own volatility there as well in relation to the American stocks there too. Now, interestingly with this one, that one actually is starting to rise above the 30-week moving average there too. So there could actually be some rumblings going on in the markets overall over there. So interesting times ahead. But keep an eye on these measures here as well for your own interest as well, and see how things work in terms of your own trading on your own positions as well too. How are our friends doing in crypto markets? Okay, now this is a very, very interesting sector overall here too. And as you can see, they've had a very, very rough trot over the last couple of years, a very, very rough trot indeed. And it has gone in terms of Bitcoin, it's gone from say $35,000 at the beginning of last year, went all the way up to around about $70,000, and it's really come down. And this is today's trade here, down to $16,500. The last couple of days have been absolutely atrocious and really awful in terms of the crypto markets. So it's not looking all that fantastic in relation to the crypto area whatsoever. And you can see this week's candle as well. Once again, it's that wick. It's got that tail at the top there as well too. And unfortunately, things are not looking that great in the crypto space as well. Have you also noticed as well, there hasn't been all that much noise in the crypto space? Not much talk going on, apart from the fact of FTX collapsing and a lot of these other places collapsing as well too in terms of crypto exchanges. But look, I think the chart speaks for itself, really, doesn't it? This has all been going on well before those crypto exchanges have actually been collapsing, and this has been a significant downtrend for quite some time. And if you think about it as well, when was the last time it traded above that 30-week moving average? That 30-week moving average is that red line. So the last time it was trading above that was no time this year. I'll let you ponder about that. That's Bitcoin. How's Ethereum going? That's Ethereum. It's traded above the 30-week moving average 2 weeks of this year. That was the beginning of March. I'll say no more. It's incredibly weak at this point. So these are the kind of things to be thinking about. Have a bit of a ponder in terms of things there. It could swing around. It could change. Yes, absolutely. Could change around. On a comparative basis between Bitcoin and Ethereum, which one looks a little bit stronger? That's Bitcoin, making lower lows lower highs. That's Ethereum. Now, Ethereum, interestingly, if you compare the two, this lower trough, looking at this over here, is actually higher than the lowest trough over here. But with Bitcoin, the recent low trough over here is lower than this trough over here. So on a comparative basis, it appears that Ethereum is a little bit stronger. Does that mean anything? I don't know. Sentiment itself at the present time for crypto does not look great. That might swing around. We don't know. My personal opinion as well, I've tried a few crypto moves recently, other times as well there too, and nothing. I'll be 100% honest with you. There were a couple that did okay, and one that did all right, and I'll go through that one in a few moments' time as well. That was actually quite a while ago, but nothing really of any note recently. Nothing that great. So I don't know. I personally, in my personal opinion, I'm staying clear of this space until some green shoots really, really start appearing. At this point, it's a really, really tough space. Really tough space. You really need some good movement here, especially with this week's candle. That week's candle with that big wick there is really showing some signs of weakness. This is the charts. All the charts are basically saying this. That's pretty much what's going on there. Now, this is a slide from a previous presentation from a while ago in terms of making a profit and in terms of using different techniques, fundamental versus technical analysis. Your call. You can use a combination of both. In fact, I'd highly recommend it if you can. Okay? Shares versus CFDs versus options versus futures versus crypto versus forex. Doesn't really matter. Utilize whatever you wish to utilize. That is the most important thing. Take your time, find what's right for you. And the same process in terms of risk management. It's effective for all methodologies, okay? And really, as you can see from all of this that's going on right now, this really couldn't be more timely. The days of buy and hold appear to be long gone, okay? Unless you've personally bought into a company at a really, 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 really low price and you couldn't care less what happens to it. Or unless you've managed to recoup the cost of your investment and you've got a free trade. At that point, you can really just sit back, leave it in the bottom of a drawer, and you couldn't care less what happens to it over the next couple of years. Perfectly fine. You can do that. But the days of buy and hold, unless you've got yourself into those positions, they're literally gone. Okay? Until we get ourselves into higher highs and higher lows on a continual basis, those days, they're non-existent right now. Okay? The bull market itself does not appear to be here anymore at this point in time. And we have got a new market to ride at this point in time. And we need to be careful. Okay? You've got to look after yourself. Also on top of that as well, planning exit strategies will help you sleep easy. Okay? Calculating and knowing your risk will help you minimize your emotions. And notice I've underlined minimize your emotions. You'll never ever be able to eliminate your emotions. Okay? It's as simple as that. If you ever eliminated your emotions, you would be the Iceman, or the Ice Woman, whichever way you'd like to call it, okay? That's tough. That's really, really tough, okay? You've worked hard for your money. Make sure you protect it the best way you possibly can. Now, do your own research. How many times have you seen this on the internet? You go into an internet forum, do your own research. I personally believe this is the master of all cop-outs. I personally hate this phrase. And you'll see me say it all the time as well too, in terms of being in response to a lot of people. But I personally hate this phrase. It really is the master of all cop-outs. It's a brief disclaimer that anyone can say. Literally equivalent to, don't blame me. If it goes wrong, don't blame me. I told you, I warned you, just do your own research. What does it mean though? Do your own research. It always baffles me. So, okay, what, you're going to be the absolute expert of knowing all the inside trading that's going on? You're going to know every single ins and outs of that company? Come on, really, be fair. Very, very tough to be able to do unless you're an absolute insider and you know every single little bit about the company. Nah. Okay, you could be the most expert fundamental analyst in the world, expert technical analyst in the world. You're never going to know every single bit about what's going on in the company. It's the biggest cop-out of all time. Personally, we all do need to do our due diligence, though. And I think that's a better way of referring to things, without a doubt. And And after all, we do deeply investigate purchases in our real life when you think about it, okay? We do that for cars, okay? We go out there, we have a look on Cars Guide, we go and compare between all the different car dealers around. Are we paying the right price for it? Absolutely. Do we want to have a look and see, make sure we're not getting ripped off by the car dealer? You bet, okay? We do the same thing for houses. We go have a look and compare between houses and compare the suburbs, and we do all of those kind of things there. We make sure we do our due diligence there. We do it for insurance, okay? When was the last time we went for house insurance or health insurance? Okay, I'm sure you did comparisons of 2 or 3 different quotes, right? So we do our due diligence there. We do it for televisions. I'm sure you do it for fridges. I'm sure you do it for everything else there as well. So why not do it for shares? Okay, they're businesses after all. So yes, due diligence for sure. But do your own research itself in terms of an actual quotation. Sorry, master of all copyouts, without a doubt at all. No, don't like that phrase. But we do need to do our due diligence. Absolutely. And this brings us on to the concept of risk management. Bit of a roundabout way of being able to get around to it, but it is important to be able to actually say this. Fundamental analysis is personally outside the scope of this discussion. I will definitely say that I'm not an expert in that area there. Analysis of balance sheets and health of business is a discussion of its own. It really, really is. But there are plenty of experts in our community in terms of ASX Traders United who can really discuss this well. There really are. So I'm going to leave that to them. Feel free to ask. We've got 1,400 members in that group, in that community. If there is not one person in there who knows a really, really good deal of fundamental analysis, I'll eat my hat. Okay, I'll be 100% honest with you. There's got to be someone in there, and there is. There really is. I'm not exaggerating. There are plenty of people in there who know how to do fundamental analysis and look at a balance sheet, and they are fantastic at it. Just go in there and ask. Really, absolutely. Okay, that's what the community is for. From a technical analysis perspective, this can get complicated. It really, really can. But best to keep things simple. The essence of trading is to keep your losses small and capitalize on the winners. Let them run. If you can. This market can be tough at times, okay? Capitalize on the winners and let them run when you possibly can, for sure. Now, the concept of risk management that I'm actually going to be presenting to you today personally is calculating your reward to risk ratio prior to entry. Okay, and that's where the gift comes in a little bit later on here as well too. Okay, calculating it prior to entry, because it's going to help you sleep at night as well too. It's a numbers game. You look at your stop losses and you do your position sizing as well. Now you might be saying, what's position sizing? Okay, position sizing, give me a definition down below. The optimum number of shares to purchase for your portfolio size for appropriate reward to risk ratio. Really covered well in Van Tharp's Trade Your Way to Financial Freedom. And even if you just Google Van Tharp and position sizing, a whole heap of internet resources will come up. Check them out. Really fantastic stuff. Okay. But the gift I'll actually be able to give you later on as well will actually help you in terms of calculating your position sizing as well. It'll help you also look in terms of whether the risk is worth the potential reward. And if not, just pass. Plenty more opportunities will come along and they'll arise another time. Simple as that. Let's go through stop losses first. Now, be able to go through this in terms of showing some examples of recent trades and giving you some real examples in terms of numbers themselves. This first example is Avenira, AEV. It was a buy signal that was identified on the 2nd of November, very, very recent. The shares were purchased on the 3rd of November at 0.017, okay, or 1.7 cents per share. The stop loss was placed at 0.9 cents per share. Now you might be saying, okay, well, how did 0.9 cents per share come through? Very simple. See that red dot down below? The 0.9 cents per share is just beneath the bottom of that wick. Okay, simple as that. If the share price went down below that level there, that's it. End of the trade, go on. All right, that's it. Discipline. Out of there. We can calculate the number of shares and everything on those lines there in accordance with the spreadsheet and everything there as to how much could potentially risk, potentially lose, all those kind of things there as well. And I'll show you that afterwards. So it's below that previous swing low on the 20th of October. There's a dramatic rise in the share price on the 10th of November, as you can see from that particular graph down below. Now, I was pretty happy with that. That was about a 30% rise, I think, in that one day. I said, okay, fine, done, Donsky. I'm going to basically close out that particular initial investment, take it out for a free trade. And that was essentially it. Managed to get out at 2.5 cents per share. Fine. I still have those shares to this very, very day. Now, since then, share price has rocketed all the way. I think we're up to about 7 cents per share, I think it was there, and it's fallen down back to pretty much, I think, about 2 cents per share right now at this point in time. It's fine. Sitting at the bottom of the drawer, it can do whatever it likes. That is a free trade in itself there. No problem whatsoever there at all. But the main thing is my initial investment is taken off the table. So there's zero risk on that. Happy with that. No problem at all. So Barbara Mines, another very, very recent trade in itself there too. Buy signal identified on the 2nd of December. Shares were purchased on the 5th of December, which I think was the Monday. 68.5 cents per share. Okay. Stop loss placed at 56 cents per share, represented by that red line that I've just placed on the screen itself there. Okay. Now that's below the swing low on the 21st of November. You can see that just in terms of here. Okay. So it's just there. Now, what happened since then? They had a takeover target announcement about a week mentioned after that. That's pretty cool. Okay. Managed to get out actually pretty much close to the top of that wick on that particular day. So I was very, very lucky on that one actually. 78.5 cents per share. Managed to get out of that. Took out my initial investment on that one as well too. So pretty happy with that. Now the number of shares that I actually had left in there was pretty low compared to what I actually had originally bought. That's fine. That's a free trade. The market has literally just given that to me for nothing when you think about it. I'm happy with that. No problem with that at all. Another one's to store at the bottom of the drawer. It can do whatever it likes. That takeover target's now going to be into a different company and it's going to be its own thing. Fantastic. Thank you very much. Thank the market. Move on. This is a US trade. Vaneck Gold Miners ETF, GDX. Okay. Now, gold itself, everyone's saying, oh, okay, gold's getting really, really important and everything there. Okay. Well, we'll see. Buy signal was identified on the 8th of November. That was the US date. Shares were purchased the next day, $26.62 per share. Stop loss placed at $22.48, which is below the previous swing low, okay, on the 13th of October. So you can see that represented on the red line there as well there too. What happened since? Did it right, okay? That actually went pretty nice there as well too. So that actually went up and the sell signal was actually indicated this morning, okay? Sell signal indicated this morning. Now, gold may continue to go up. It may. But in this particular ETF, there was a sell signal indicated. It was actually indicated yesterday. I sold out today. Now, it may go up and it may shoot off. And, you know, there's been a lot of volatility in the markets. Everyone might be flooding into gold. You know what? Frankly, don't care. Happy taking my entire profit out of that one there. And I'll move on to the next trade. Not an issue whatsoever. It's done okay, but it has definitely fallen back. But sell signals there, I'm gone. Ethereum. This was from a while back. This was back in March. Okay, now if you've been following the ASX traders, you know I actually did follow this one through on the actual community forum itself. You may have actually seen this one. You might even remember this one. Now, in terms of Ethereum here, it was purchased on the 16th of March, $2,676.64 per coin. Stop loss was placed. You can see on the red line, I was very, very generous with this stop loss. Because this is something I actually said to myself, you know what, I wouldn't mind owning this one for a long period of time. I'll be a bit more generous and give this one a bit more flex. Okay, stop loss, $1,740. You might say, whoa, it's very, very precise. Where did that come from? That was the open back here on the 20th of July, 2021. Okay, very, very solid support level. So being very, very generous. We'll see how that one went. Now, this one was an interesting one. It actually rose quite significantly in a short period of time, up on the 28th of March. Now, it rose up to a former resistance point up over here, as you can see. All right, so around about the mid-January point, it rose to that particular level here. And I thought to myself, you know what, I'm going to sell off a small portion of this, lock in some profit here, just in case. Happy to do that, because if it falls back from this resistance point, I've at least locked in something. Happy with that. So sold off 15% of the holdings as that resistance was reached on the 28th of March. That was about $3,300. Sold off a little bit there. Stop loss was then raised. Okay, so you can see that stop loss was raised, and it was raised to this here, which is a support level here that was actually reached. Okay, so that in itself is a new support level there. So if this particular stop loss was now actually breached, the rest of my position will be gone. And sure enough, 25th of April, 1 month later, that stop loss was breached. The rest of the position was gone. Now remember, I actually entered that position in the 2,600 zone. But all of the rest of that position was now sold at 2,800. So overall, everything was sold at profit now. So am I worried? No, not at all. So it's a matter of risk management. It's a matter of making sure you're looking after a position that had actually done pretty well, but you're also giving it room to breathe under that circumstance there as well. That's the circumstance. Now, where's Ethereum trading right now? We're at 1,200 levels, isn't it? Okay. Am I happy with what I did? Damn straight I am. Harvey Norman. This one here was actually a short trade that's actually been identified at the beginning of the year. Okay. So this was a sell signal identified on the 4th of January. Okay. CFDs were sold on this one here on the 5th of January, $5.03 per CFD. Stop loss was placed just above the previous swing high. So if it went above that particular level there, that's it. Close it out, cover that position, and get out. That would be the circumstance there. Now, over the next week, it did nothing but fall. Now, interestingly here, the trade was working in favor of the short sellers, but, and this is the big but, the support level from way back here, okay, take a look back there, right? Look back right back there to around about the end of November 2021. All the way back there, it was bouncing around out there. No, not happy with it. Short was covered at $4.84. And sure enough, after that, it actually started rising. So that was it. Take a bit of a profit out of there and get out. You got to listen to what the market's telling you at times as well. Absolutely. Position sizing. Okay, this is where the spreadsheet comes in particularly handy. And I'm going to actually now switch across to what I'm going to be actually giving you as a gift as well after this. And this is essentially it. It's simply a matter of being able to provide and put all of these figures into the spreadsheet, which will automatically calculate the number of shares of interest for you and be able to do the calculations for you in relation to the number, the positions themselves, and also the risk based on the information you put in. Now, simply, it's a matter of being able to actually put in the figures that you wish to actually have into the yellow boxes. That's all you need to do. Everything in the grey boxes will automatically shift and accommodate in accordance with what you do there. Now, the numbers I've put through are just round numbers that I've literally made up. So I basically said portfolio capital of $100,000, which is highlighted there. Okay, $100,000, and basically said, okay, look, each trade you're going to put through is about 10% of that in terms of actually investing $10,000 each time around. Okay. Now, you can change that. So if you want to change that to $5,000, for instance, you can do that. Now, as I did that, did you notice that the approximate number of shares of CFDs changed as well? So I'll just flip that back. Okay. So by flipping that back to 10,000, this approximate shares figure changed to what would be required under those numbers at the entry price. Now, casting your mind back to Avenira, for instance, I entered that at 1.7 cents per share. Now, if I flip that back to $5,000 instead, it's actually telling me, look at only 294,000 shares rather than $10,000 worth being 588,000. The calculation is there automatically according to how much you wish to invest. On top of that as well, you can change the brokerage, like in terms of shares, if you're with ComSec, for instance, $10, $19.95, depending on how much you're buying, of course. That's the kind of circumstance that you actually have there in terms of the brokerage. And you can change that all accordingly as well. And that will change all of your figures in terms of potential profits, potential losses, all of those circumstances that are right there. It will change your cost of opening the position, and it will change the calculation in terms of your profit risk ratio, reward risk ratio, whichever way you wish to actually say that. So you can then get an assessment in terms of how much you're willing to risk and what your reward to risk ratio will actually be as well. So all of these figures will come through, depending on which way you wish to actually look at all of these. And you can do these in whatever way you wish. So you've got shares. If you want to put it into your super, you can do the same thing there. Like I put some Barbara mine, for instance, into my super. That's why the brokerage is a little bit different. Okay. US shares, my US shares trading account, the brokerage is, yes, $1. Okay. So you can put all different type of things there in itself there. Crypto account, brokerage, $10. Okay. So all different aspects in terms of which way you wish to actually put things through. So you can do a different calculation depending on which way you wish to do it. So if you only wanted to put $5,000 as an investment in instead, and you thought because that was a little bit too rich, it will calculate how many shares you wish to put in. Now, if we want to change that to 290,000, then obviously your potential loss is going to change. Now, that extra stop was 0.9 cents, okay? Potential loss of putting that trade on would be 2,300 for a $5,000 investment. Almost half, because when you think about it, 1.7 cents down to 0.9 cents is around about half. You are risking about 47% of your initial investment. Now, compared to, well, $2,000 in terms of the, $2,300 loss out of a portfolio capital of $100,000 is about 2.36% in terms of your portfolio at risk as well. So all of these things are getting calculated for you automatically in accordance with the figures that you are inputting. That is the way of looking at this. Now, you're doing all of this before you even place the trade. That is the important aspect. What if the share price goes up to 1.8 cents? Okay, now that's important because in the middle of the day when you're actually doing something, this could happen. And if it does, you need to know, how does this affect your reward to risk ratio? That's how it would affect it. Are you still happy with that? If you want a reward to risk ratio greater than 2, you wouldn't put that trade on now. Okay, because it's now gone down to 1.95. So these are the kind of things that you can actually do in terms of quick, decisive, it's a numbers game situation right here and there. Okay, so that is the circumstance behind this particular spreadsheet, and this is the gift that I'm going to give to you for nothing, no strings attached. Go out there, utilize this in whatever way you wish. It's entirely up to you. Have a play around with it. The numbers are there. These were actual trades that were placed, the ones that I actually put in the spreadsheet. Have a look through them. Go through the presentation again if you wish, okay? And see, this was actual trade there, okay? Now, the amount to invest is different to what I actually put on in my portfolio, but I've just put these in as round numbers so you can actually see what the circumstance would be if you invested $10,000, for instance. So that's the circumstance there. You can have a look in terms of what the circumstance would be and play around with your own portfolio, what the recommendation is in terms of, say, for instance, Vanguard. He normally recommends maximum risk of 2% of your entire portfolio value would be what you would probably be striving for, so you can actually adjust in accordance with that. So straight away, you can already see 2% of your entire portfolio. Some Barbara mines satisfied that rule. GDX satisfied that rule. The Ethereum one didn't. So you would adjust the number of Ethereum coins you would purchase. So you could adjust that to 2, for instance. That now brings it down to below 2%. You could adjust the AEV shares, for instance, instead of 290,000, maybe 200,000. Okay, that's a little bit low. We may be able to increase that a bit. Okay, perhaps a little bit less than that. So maybe 219,000, maybe even a little bit less. You can do all of this before you place a trade. But you've got to remember as well, I'd adjusted that to 1.8 cents per entry rather than 1.7. So that's giving you a bit of flex and a bit of maneuverability on the day of the trade. So you've got the ability to be able to actually say, this is the worst case scenario, if you want to think of it that way. And it's adjusting everything in accordance with what you want to do as well too. So you've got the ability to be able to play around with the figures before you even place a trade and be able to basically say, does this work with your scenarios? That's the important part about this. And it also works with shorts. So I've got a tab there as well too for shorts. And the example of Harvey Norman is in there for you as well. So feel free to have a play around with those and see how that goes. Now, in terms of being available for you, very, very easy to be able to access this particular spreadsheet. Like I said, the gift is available for you. Go ahead, have a look at it, download your free copy of the spreadsheet from my website. Okay, so have a look there. Plenty of other resources that you can take a look at over there as well too. A lot of the resources are basically just references for you, just recommendations I've personally found useful in my own trading. So have a look and see. But you'll find the file in the blog. Enjoy. Hope you find it useful. And as suggested in the spreadsheet, adjust the light yellow boxes with your own figures. Okay? The figures in the grey boxes will adjust accordingly, and you can copy and insert the columns to create new entries. That will be the easiest way. Copy and insert. So that way it'll actually copy all the formulas across for you, and then you can adjust in accordance with whatever trade you wish to place. Nice and easy. Most importantly, enjoy the journey of all of this. There's lots of learning ahead. Lots. Okay? Every single day is a learning experience in relation to trading and investing. And it's really, really fascinating and really, really interesting. And it's dynamically changing every single day. The good thing about all of this, though, is that if you're looking at things from a risk management perspective, you can at least adjust everything in accordance with what you wish. Okay, so if you can at least know what's at risk right from the beginning before you can place the trade on, you can at least say to yourself, okay, I'm personally in control and I can minimize my emotions behind all of this to be able to actually think without allowing the emotions to control me. That's important, because as soon as the emotions start to control you and you've let the money just fly out the window, then there's a lot of real problems laying ahead for you. So I hope that helps. Feel free to really contribute in terms of the community forum. ASX Traders United has been built for you based on that. Okay, so kudos to Lonnie for being able to actually start that up for us all. And it's an absolute pleasure to continue that there and keep it moving. But it really comes down to everyone in the actual community to really help contribute and get it moving all there as well. So bring on all your contributions and get it all out there. Okay, we're in for some very, very interesting times ahead in 2023. And most importantly, take this time over the festive season to really share some time with your family and friends and your loved ones. And I wish you all the best for a fantastic festive season. Have a fantastic time, and I look forward to sharing more and more time with you when you're investing in 2023 and beyond. Take care. I'll catch up with you soon. Bye for now.